You can ask any questions that you may have, and the boys will read that out as I've got the charts in front of me. I can't see that, so ask your questions and let us know what you have to ask us. But this is really about, I guess, sort of breaking down the year a little bit as to what has gone on, because it has been a hectic year. A lot has transpired in the last 12 months, from the November that we are in right now to the November that we were in back in the November of 2021. Of course, that was around the peak of the market, back when Bitcoin was sitting up around, 65 or up to a high of 69,000. We wanted to break things down a little bit, discuss some of the ins and outs of what has happened this year, what we can learn of it, what our plans are for 2023 and possibly even before 2023 by looking at a few levels, and just give a bit of an understanding as to what we have in front of us, given all the negativity. Really, there's been an awful lot of negativity in our market for the last, all year really. You know, from about, I think it might have been April, when Luna fell apart. We've just seen a cascade effect of companies continue to fall in value and just cease to do business. I mean, the bankruptcy of FTX has been the most recent. We've got Genesis on the ropes at the moment as well, so it'll probably unfold a little bit further as we go into the back end of the year. So we've all been affected by this. Everybody who's on this chat, so we can discuss it fairly candidly. We won't go into the details of the administrator's role because that is something we cannot cover. So any questions relating to that, please refer to your administration team, because we can't touch that. So the first thing I wanted to do was welcome you, Lou, and welcome Rhys. Both of these guys are the traders in the TRADERCOBB Discord community. So thank you for being here.
Thanks, mate. Thanks for having us.
Yeah, it'd be a good little format too, because there's a couple of us in here. Now, I mean, for you guys, what's been the biggest event this year in 2022 for both of you?
Should I go first, Rhys?
Yeah, you go first.
I mean, where do you start, really? Like, look, we had we had the start, like the first big sell-off towards the end of January, which was awesome to trade, actually. We got some good trades on there. And then obviously, all the stuff with Luna, which caused Bitcoin to break, was kind of the catalyst of Bitcoin to break from 30 down to roundabouts where we are now.
Yeah.
And then FTX. But I'd say the biggest, for me personally, the biggest event for me was FTX, my FTX trading account getting locked up on there. But then, you know, now that's all past, kind of just looking into the future, and hasn't really affected me that much, but like financially it has, of course, but probably FTX going down. I didn't see that one coming. I didn't see it coming. That was a left field. That was a left field for me. Completely. Like,
what about you, Rhys?
Yeah, I think the same. The collapse of FTX that sort of took us all by surprise. You know, Lou and I were still reasonably new to markets and trading. Never experienced anything like this. And yeah, it sort of blindsided us and caught us off guard, which is unfortunate. I felt like I was just getting to that point in my trading, just finding a really good rhythm, getting into things, learning FTX back to front, and now it's just been taken away. But you've got to look at the positives in situations like this. You know, I'm just sort of grateful that it has happened now and not in 20 years when my portfolio was 100 times larger than what it is now. So yeah, I think it's just been a really big learning curve, both in trading and personally.
Yeah, and that's the thing. I did a podcast today that goes into that in a bit more detail. Really, the opportunity that we have, we can't lose sight of that opportunity because some bad apples and some bad experiences. I mean, I've been trading for 18 years. I've been investing since I was 16. I've had many events like this. FTX for me was the biggest one that hit me this year as well. So all three of us collectively. I wasn't involved in Luna. I wasn't involved in Celsius. I wasn't involved in BlockFi. I wasn't involved in any of the others. But the FTX one hurt me in a big way, not just from a financial standpoint, but from a point of trust and heart. You know, of course, everybody knows that we had the contract with FTX. We were a promoter of their platform. We would scan their perpetual contracts. They were the best platform out there. And I don't think anyone can honestly say now with hindsight, truthfully, oh, I could see that coming, or very few people. For example, I waited for a long time before we did anything with any exchange. FTX went ahead and got an AFSL, Australian Financial Services License, under the ASIC regulation. As far as safety goes, that should suggest that they're as safe as, say, trading with Oanda or CMC Markets or IG Markets or any of the big, traditional legacy players. Unfortunately, we learned that lesson that regulation does not mean safety at all cost. And we now sit back and we wait. But again, coming back to the personal growth side of things, people have got to understand that they have a future here. They have an opportunity to make good money, but not only to focus on the money, but what are you trying to do for yourself and the people around you? I covered that a little bit on a Twitter space yesterday. It's if you're just around to make money, you don't really have a purpose. You've got to have a purpose. So that purpose could be, I want to make money as a trader. Absolutely. No problem with that purpose. But how do you get to that point where you are consistently making money? Well, it's through learning, investing in yourself and moving ahead. And these sorts of periods in time are massive opportunities for two reasons. One, we can develop ourselves. We can learn how to dust it off, move forward and accept what happened. Assess our counterparty risk better for next time and take that with us. And two, we've got prices that are very much down. Now, whether or not there's any capital on the side that you may have to be able to inject back into the market or not, this is a really good time to be building things and building yourself. So, a couple of weeks of a lot of pain. Now it's sort of dusted off, and let's continue on. It's been a rough one.
But like you said, it's been a rough one. But the amount of growth this year that has like been the eventual outcome of everything is huge.
Yeah.
Like I could not have thought I would have grown so much as a trader this year. As a person as well, and just in everything. That's massive.
And that's personal development 101. You learn from your darkest days. You just can't quit and give up. There's a what is it? It's a picture. You've probably all seen it. There's two men with picks. They're digging along a tunnel. One of them gets, like you can see behind the dirt, there's this giant big diamond, but he gives up a couple of scrapes away from getting to the diamond. The other guy doesn't give up and gets it, and he calls the other one lucky. It's not luck. You've got to keep pushing through. That diamond could be just around the corner for us, and it is if you accept that to be the case. Now, one of the things I wanted to, well, we've got the Bitcoin chart up, is I want to incorporate a bit of a chat and a bit of a market analysis. I did a video going back, maybe, when was the date? October 19, where I talked of $10,000 Bitcoin, the breakdown to open eyes. I got a lot of flack for that, not so much at the time, but when we started to do this, I was having people saying, we still going to 10 grand, Cobber? We still going to 11,000? And I'm like, well, maybe. I mean, it's just a lower high potentially. This is the FTX collapse candle right there. And just to give some perspective on that, it's a 22% candle. All right. We saw a lot of big 22% or big candles throughout other areas of the market where it didn't seem quite so grim. The FTX saga has certainly been, in my view, it's felt bigger than a lot of these other collapses because it was people's money and it was a company that really had no right to go down the way it did. But just coming back to this consolidation, it's down on this chart with enough data. Very, very similar, and that's what I covered in the video. Have a look back here. That happened, this consolidation occurred throughout October, September, sort of October, throughout here, and lower highs kept building in. Now, I remember trading this and getting a short on back here on a 2-hour candle, 2-hour cradle it was, and myself and a lot of clients did exceptionally well. I remember it very well because this was a really boring period. Check out a couple of things. The first thing is look at the distance between the high to there to the consolidation, 60 or let's call it 70%, right? And then the date. Okay, so the high of the market was December of 17. The breakdown was the 12th of November, a 70% pullback, or 72 or whatever it was. Fast forward to where we are here, to where this consolidation occurred. Have a look from the, well, first of all, no, I'll do this first. About the same, right? 70 odd percent. The high was set on the 25th of October, so not too dissimilar in the time frames, the percentages, and look at the week. The week was 1 week prior to the last time it broke down. So much cyclicity in this market, so many similarities in this market that it's really, really, really wild. Now, whilst we broke down without convergence, let's have a look. I'll do this. We've got to look at areas where we could potentially be looking to buy, okay? Or if you are looking to get back into this market, what are some of the levels that you can look to get in on? Well, I just use support and resistance. What do you guys use? Same thing, I'd guess.
And fibs.
And
Yeah, okay.
Yeah, fibs, but yeah, same as you. Higher time frame, support and resistance levels, weekly, 2 weekly, monthly.
Yep.
And what we've got coming in at the moment.
Sorry?
Just got a few questions.
Oh, yeah, bring them
on. Just Big Keith, a big happy Thanksgiving to everyone stateside.
Oh, thanks, mate. Happy Thanksgiving to you as well.
Satoshi Nakamoto said he was able to withdraw all of his money off FTX before they stopped withdrawing. So
nice.
Very lucky. Got in a good
time. Awesome. Good on you.
Also, Big Keith is asking if we were in FTX. I definitely was.
Yep. I definitely was.
Trading capital was on FTX, so I am in the same.
Everyone put their hands up if they were in FTX.
Yeah. All of us sort of caught us off guard, like we said at the start of the video. A learning curve. And also power of 3 ICT. I'm not sure what that means. If you could elaborate on that, that would be fantastic, Big Keith.
And that's gist
them.
Of it? Okay. Yep. So thank you for those little comments and questions and whatnot. Yeah, we all got affected in a big way because that was the platform. You know, we didn't get any. Had we not have had a relationship with FTX Australia the way that we did, and keep in mind that they were lied to by the Bahamas team, saying no, everything's fine, we're solvent, we've got plenty of capital, and we're backed 1-to-1. It's nothing to worry about. So poor old person in Australia here, he also had all his money on FTX, and all that work he did, he's now in the same boat as what we are. So he was lied to. The information was then transcended through him to myself and everyone else. So yeah, we got done, but time to rebuild. So where do we rebuild from? Well, the levels of importance. We got some support up here at about 12.3-ish, 12.4. We got more support down here at about 10.5. Now, this was the point at which the bull market started, and I did a lot of talking about this candle and this pullback, the first pullback in the weekly uptrend, and that turned out to go quite well, didn't it? So I'm looking for something similar to a reversal of trend, but what that will be for is trading. Have a look at the time that this occurred as well. This was in September of 2020, all right? Now, the halving event, when was that? When was the last halving, guys?
It was May 2020.
May 2020. So we're coming back to somewhere in here in May. So the halving happened. The market pushed up. This was the first pullback after the halving. The next halving is scheduled to be roughly around, I think it was June 22, 2024. So what I would suspect we're probably going to see is we're probably going to see a move like this at some point. Now, keep in mind, that's not an inconsequential move. From the low point there, about 3,100 to the high, it did about a 3.5x. Plenty of money was made in that period of time for those that were able to take their profits. And what I'm looking at here is to replicate the lows. A couple of things to consider on the 17 from high to low. So let's work through these numbers. The high to the low, 84%. Okay. So let's say, considering the similarities between the time of the peak of the market, the duration of the pullback that we've come to, the consolidation, and the dates of the breakdown, let's have a look at what 84% would look like from the all-time high. About 10.7. All right. So considering, and don't forget, I'm looking at this not from what I want, not from what I need, not from my feelings. I'm using technical analysis. I'm doing what I always do. I'm using the chart to give me the information for me to make.
And sorry, Craig, just to add on that, not from news. This is we're not thinking about the news. We're not thinking about anything. We're just looking at the price action on the chart.
Exactly.
Nothing else.
Purely price action using historical data to help us to better ourselves into the future. So getting us down to 10.7. So how do we play this out? Well, we know we've got about 10.7 as our equivalent 84% move. Yeah, it could go lower. It might not. We don't know what the future holds. We only know what we've got. So the way I'm playing this is I'm looking to really raise my first orders at about 12.5. Okay, so getting myself a buy order there. Now, if you're going to split that across, let's say $10,000 to make it nice, easy math, I'd go 33, 33, 34. So $3,333 would be a buy order there. Then I'd probably, actually, I was thinking of going a little bit higher, I think. So getting it 13.5, 12.5, and 10.5 or thereabouts. So I'm scaling my way in. That way, I've got a plan in place so that I can buy my Bitcoin. Once I buy my Bitcoin, straight off into the Trezor wallet, safe as houses, boom, away we go. They're the levels I'm looking at here on Bitcoin. I got a question for all of us. When it comes to, because this is another reason I got hit slightly more with FTX, is there was money there for these exact orders. As the market's been falling, I've been thinking, okay, well, I want to have funds that are available there for me to have my low limit orders in, because if we get something like, if you recall the COVID crash, you get something like that. If you had an order in down here, geez, it wasn't long till you doubled your money, quadrupled it, and so on and so forth. So having those low ball offers in, sometimes the market goes, skittling down and then goes bing as a big quick bounce. So what are our plans around the counterparty risk? So if we are looking to buy at 13.5, 12.5, 10.5 as an example, where are we going to be able to do that? How are we going to do it? Because it is going to require some counterparty risk. And of course, the appetite for counterparty risk at the moment is low. What do you guys think? What are you doing?
Do you want to go first, Rhys?
My plan is to just accumulate Bitcoin, DCAing in, and maximizing the margin on the platform that I'm trading with. So I'm pulling my capital, which is mainly Bitcoin, into a ledger, leaving the bare minimum on the exchange that I use, and just really utilizing margin.
Yeah, I'm doing
utilizing margin on, that's for your trading, not your building of stack, right?
Correct. Yeah, just for trading. Yeah.
Yeah, I'm doing something similar. I've also, on the exchange that I'm using at the moment, I've also whitelisted a withdrawal address as well. So like all money coming out can only go to that address. That address can't be manipulated. If I need to get funds off the exchange really fast, I can just boom, hit that whitelist address, withdraw out straight away for whatever reason. So that's the only other thing to add on that I've done.
Yeah, well, they're the things that we can learn. I mean, that's, one of the other things that I think is important. I know I've been talking about it a lot lately. So if you've been hearing me on lots of my content lately saying this, I apologize. But also I think it's important that everyone understands it is, what we're seeing at the moment. I'll put the question to you two gentlemen. With regards to reserves, Binance has come out and said, we've got this, and OKX has said this, and Bybit said this. Well, is a reserve enough? What do we want to see, and who's auditing these reserves? Because again, people go, oh, look, these guys are fine. They got 69,000 Bitcoin on their platform. But it's like, hang on a second. SBF literally 3 weeks ago or 4 weeks ago, whatever it was, said that they were completely solvent and they had funds on deck. Now we find out they didn't even have any Bitcoin. So it's one of those things where people can so easily get the wool pulled over their eyes again, because what these exchanges are doing is exactly the same as what SBF did. As far as, I'm not saying that they've done anything wrong. That's not what I'm suggesting. What I'm suggesting is that if we're just going to accept somebody saying, I'm okay, I'll take your word for it again, we need to see more. What do you guys want to see in that regard to give you that real sense of safety?
Well, the leaked balance sheet from FTX is what sort of started this big collapse of FTX. And I think the main point about it's called a balance sheet because there's two sides of a balance sheet. There's assets and there's liabilities. An exchange can show us how many, like the value of their assets as much as they want. It can look really good on paper, but what are their liabilities? You can have 10 billion in assets, but 12 billion in liabilities. It's not good. It's not good for us. It gives us no trust in that exchange. So plenty of exchanges are coming forward and sharing their reserves or their assets What about their liabilities?
Lou?
Yeah, I'm the same. Like with this new website that's come up, I forgot what the name is, but it contains all the
Yeah,
cold
I was trying to think
of
of it
all the
too. But yeah.
Binances, of all the exchanges. Sorry, and yeah, it's showing all their cold wallet reserves, but where are the audited accounts showing all their liabilities? Like like what Craig was saying, like it'll just be the same thing that'll happen with FTX again in the future. And the reason for this space is so we don't have centralized authorities that have unaudited books to prevent collapses like what we saw in the 2008 GFC. Like that was the whole point of cryptocurrency existing as well.
Yep.
So yeah.
Nansen.ai, that's the website.
Nansen.ai, that's right.
Yeah.
Now, the other thing on with regards to that is, I mean, we can't make informed decisions without information. One of the beautiful things about legacy markets is there are so many ways that you can work within that market. Now, I haven't done this for a long time, but I used to have a strategy where it was all based on fundamentals. So you'd look at price to earnings growth ratios, price to earnings ratios, the debt levels, the income, the market, all these types of things. And it allows you to make an informed decision because you have that information. Now with crypto, of course, we've done well with some projects that we've invested in, but you've got no idea of their cash flow. And for me, when I invest, the most important thing, if it's a new startup type, pre-sale, for example, is the marketing and the tokenomics and the unlock period. And literally, what price can I get in and when's it going to unlock and what's the unlock price going to be at? So where can I recoup? What's the earliest period in time that I can recoup what I've put in? Now, that might sound to some people like I'm just dumping on the project. Not at all. That's my investment to do as I like. I might only get 10% unlocked up front. Well, if I'd like it to do a 10x, so that if I put 10,000 in, I can get that 10,000 back, and that's my scale out of 1-to-1. The reality is, though, is I truly believe that exchanges, if they're going to get ahead of regulation and make that process easier, because it is going to come, we're still going to have DEX platforms, but SEX platforms, that sounds weird. CEX platforms are going to they're going to have a space. Your DEX platforms tend to have higher fees. Now, don't forget your DEX platforms, you're also plugging into your MetaMask. Your MetaMask, we've seen in information news coming out today that they will skim and share and own your addresses so they can link you to that sort of thing. So that's not even decentralized anymore in many cases. And there's still the risk of a hack or whatnot. Centralized exchanges have a place, but they've got to win our trust back. So if they were to do something very similar to what legacy markets do in their reporting structures, because they have to by law, they're regulated, by showing everything, then I think it's a step in the right direction to let the market and the industry heal. One of the other things that I think is really important in that regard is, just the honesty and truth up front. If they start to take that on, it's going to be a lot easier for all of us to accept that and move forward. And it's going to give another element to being able to invest as well. If we can actually see transparency throughout these centralized exchanges, because that's the word that they're using. We're being transparent. Here's our balance sheet. That's kind of like saying I'm a human being, but you can only look at my hand. Like there's so much more to me than just my hand. So that was a really weird analogy. But there's a lot more to unravel in this area. And I'm hopeful that these exchanges get ahead of it and create a new way for us to be able to look at the markets and understand the markets, because regulation's coming. And look, I'm all for it, to be honest with you. I'm all for it because I don't want to see this happen again. That's what I was going to say. In 2018, I was complaining about using BitMEX because it was crap. The order systems were terrible, and I'm saying, why doesn't somebody just copy legacy market order systems and margin requirements and whatnot? Then FTX came along and did exactly that. If exchanges and crypto companies, for that matter, it doesn't even need to be an exchange. If you're a crypto company out there and you've got revenue and you've got money coming in, like a lot of these layer ones, start to report the same way as they do in legacy markets. Allow legacy markets to lead the way into what we need to be doing so that we bring them with us. they start investing because they know how to now, rather than just, oh my God, I just buy a coin and hope it goes up, but also allow them to then look at exchanges and see how solvent they are, how profitable they are, and go, you know what? I'm going to buy a heap of the BNB token because I can see that I'm not buying equity in the company, I'm buying the token, but here are the metrics for which I can make that decision. That's the level of transparency I want to see. Big time.
Yeah, for sure.
So,
a few questions.
Yeah,
Sorry,
sure.
I'll have to keep cutting in. Just, Mona Lisa, it's awesome. This quickly you can all smile and laugh about the collapse of FTX. Still pretty fresh, but it shows how confident you all are, and that you say the skills you have will get you all back. So don't be fooled by the smiles. I'm crying in the background, but no, it's I think we've all sort of put that behind us and we're all moving on. We've got Big Keith with a few questions. 3 equals accumulation, manipulation, expansion, either up or down. Short at 16,350 if Bitcoin breaks that level.
Sorry, can you say that again? Was that a question or
just some comments?
Yep.
Satoshi Nakamoto. I like the idea of the big picture of Bitcoin soon. You will see everyone will copy it in their channel. So I think so too.
Yeah, that's what happens every market, right? You get the Fed, and
that's what a bull market is, right?
That's what a bull market is, or just it doesn't matter what type of market.
Thoughts on Coinbase?
Yeah, that's a really good question, and I've got to be honest from my standpoint. I'll let you gentlemen speak for yourself on this. From my standpoint, I haven't really gone down the path of looking into that too much. I have no exposure to Coinbase. And one of the other things I'd also touch on there, coming back to, I think it was Mona Lisa, who said that we can smile about this FTX thing and whatnot.
Sorry, Mona Davies. I said Mona Lisa. Mona Davis.
Mona Davies. So one of the things about this is I had a hack a little while back. It was only for it was a small amount. There wasn't too much in the wallet. But they got me. It was in a MetaMask wallet, right? And I had someone say to me, like, how can you get over it so quickly? And this person wasn't a trader. They weren't a trader. And my answer was, what are my other options? Do I look at this loss? It was big, but it wasn't big. It was, it was enough to go, ouch, that stings, but it wasn't enough to go, oh my God, what's going on? Like this one is. But the reality is that your choices are simple. You can get over it. I mean, you've got to feel things, because if you don't feel it and you block it away, this is what I've learned from my self-discovery this year, is that you've got to face things. And if it hurts and let it hurt, but don't dwell. Now, part of that smile that we can put on is that we've got the skills. We didn't get lucky to make the money that we've made. Sure, we got unlucky to lose the money that we'd made, but we're still in control of this with our skill set and our ability to create wealth and income. So that's where the smile comes from. The second is, I don't want to stay down. I want to get back up. I want to keep moving forward. I've had so many bloody knockdowns in my career. This is another one. You just keep on moving forward. And that also relates back to the question about Coinbase. If you sit in social media, particularly Twitter, because it's a hotbed of, it just keeps churning out so quickly. If you sit in there and read obviously threads have become the sexiest thing on the planet. Everyone's writing a thread about this and that. You can spend all day reading through that, and name a thread that you've read recently that was about how beautiful the earth is, how nice it is to feel fresh grass under your feet, the feeling of swimming in the ocean and breathing in fresh air in the bush. Like, these are positive things that are available to us every single day. If you're feeling shit, and I know what I did was I got myself in the bush. I went to Currumbin Valley into the creek there and got attacked by an eel. At that stage, I was like, for goodness sake, like, does everything just want to hurt me? That was but I mentioned that because the point at which everything lies. I'm in nature. I'm having this beautiful swim in this beautiful rock pool, and all of a sudden I get attacked by a freaking eel. And after I raced out of the water with a bleeding foot, I just chuckled. I laughed because I'm like, are you freaking kidding me? Like, why? What are you? And you can laugh that off. And once you get to that point, because I was very heavy for a week or so, once you get to that point, you can move on, but don't sit there and stare at your socials all day long, because you're not going to get that positive information. To get that positivity back, take your shoes off, go for a walk in nature or something that you connect with, and then you can start to rebuild. So I don't know what's going on with Coinbase because I'm not looking. You guys might have looked into it a bit more than me, so feel free.
I haven't looked into it too much, just through the work that we do in doing a little bit of research on exchanges to reach out to them. Coinbase is next on the list.
Yeah, I just know Coinbase is publicly traded in the United States. Like, they're an actual company with shares. They're also the custodians of large amounts of Bitcoin for major institutions, and that's all I know about Coinbase. Like, we don't use it as a trading platform because it's not the best trading platform out there. But as far as an exchange, they seem okay, I guess.
Okay, yeah, we don't have much to add. I think it's because all three of us we talk most days, or at least a couple of times a week. And obviously, with all of us being hit by FTX, we talked a lot. We talked a lot about how we were feeling and what was going on. I think we all agreed that we weren't going to stick our heads into social media. We were going to accept it, feel it, and then move on. So are there more questions there or anything like that, Rhys?
So we've got one. How much do I need to make around 15K a month? There's so many variables. That's right.
There's a lot of things that depend on that. Oh, and by the way, just whilst we're there, I should probably mention, for anybody who wants to be aware of it, we're running a Black Friday sale at the moment. You just go to TRADERCOBB.com and you can click on the little banner there, and you'll see 50% off everything. Things are bundled there as well. So if you are looking to get into trading, or you want to join the community for a 12-month period and save yourself some money, it's 50% off right now. So go to TRADERCOBB.com to get a hold of that if you'd like to. So, all right. So look, we've looked at Bitcoin. Whoops, sorry. Was there something else?
Oh, no, that's fine. That's all the questions. Guess we just continue on with charts.
Okay. So one thing I wanted to point out as well is, again, bringing that perspective back to the market. We've established that we've talked about the exchanges and the fallout and how to get over some of those things. Again, I would strongly advise anybody who's got access to podcasting goes to the TRADERCOBB Crypto podcast after this, or during the day or during the weekend, and have a listen to the show that is the most recent show, which is today's episode. It is about collectively coming back, bouncing back, how to be successful, how to get yourself out of these periods where you might be feeling a bit heavy, a bit down, from somebody who's been there and done that a lot, and who's just gotten over it. I mentioned in the Discord community, recently, how do you eat an elephant? Well, one bite at a time. I've already eaten an elephant this year, and I'm eating another one right now. I'm sick of eating elephant, but I'm going to keep on eating that elephant until I can eat something like a bloody...
Just on that as well, eating elephants. After I had all my funds locked up in FTX, I then got COVID-19.
Oh, yeah.
Straight after. Yeah, anyway.
Yeah, you got belted straight away. So, yeah, perspective, we'll get through it. So what I want to do is have a bit more of a look through the market and give it a little bit more of that perspective to show, because it has felt heavy. Some people I know have been hit by Celsius, BlockFi, and FTX. Ouch, right? Bad year. However, how bad is it on the charts? Let's have a look at some of these weekly charts. Now, we know that Bitcoin's broken down to a new low, this week, 15.5 or thereabouts, wasn't it? 15.486. Which took out the lows that were set back in June. Now, that's after this FTX collapse. Obviously, there's a lot of collapses through here, but not everything is in that position. So just to give some perspective, considering how bad the FTX situation has been felt, and like everyone's talking about crypto again, but all for the wrong reasons, what we've got right now is we haven't got that much that has broken to new lows. Have a look at Ethereum, right? From its low that it was set on the recently, to its low in the 2022 market, we've still got to fall another 18%. So with everything that's gone on, Ethereum has not pushed to 2022 lows. Let's have a look at Binance. Well, Binance, geez, that's had a bloody week, hasn't it? Binance from its low here, well, let's go from current price, right? Let's be realistic here. Current price. it would need to fall essentially 40% to take out the lows that was set back in June. It's a long way from doing that. Now, of course, you flip that around from the low to the high, and you'll actually see that means it's recovered to this point 61%. So this is during everything that's happened in the last couple of weeks, the rumors of Genesis, not the rumors, the reality of Genesis, the collapse of FTX. And Binance has still got a long way to go before it takes out the lows. XRP. Now, whilst XRP has got a while away, it's been, it flattened out again that 13th of June. But have a look again. For us to break new lows on XRP, we have to fall nearly 30%. So it's still holding. Here's one that's going to spin you out. The meme coin, Doge. Obviously, this was around the Twitter takeover. From its current price to take out its lows, it needs to fall 40% to set new 2020 lows. Cardano has done it. Cardano in its weekly downturn. This is why we trade trends. Lower high, lower low, lower high. Actually, a cradle position there. Not tradable because it was divergent, but a bearish candle in the cradle. Moving away, it's set new lows. Matic has not. Look how far away Matic is. Matic is 60% away from setting 2022 lows. DOT has done that. It's ground down, very similar to Cardano. Solana obviously has been bashed over the head with a brick. It set new lows just a couple of weeks ago. And Shiba, well, again, another meme coin. Believe it or not, there's 2 meme coins in the top 10. Are you kidding me? It is what it is. It's still got another 20% to fall until it takes out its lows. And the reason that I showed you that is that markets are driven by supply and demand. Obviously, there was a lot of selling pressure throughout this year in various stages. It looks as though potentially, I'm not suggesting that we're not going to go lower. As a matter of fact, I believe that we have the potential, definitely, to move lower. But the market's not reacting as erratically as it was. The Luna crash we saw, that was back in April, May, wasn't it? Around here, I think. This was part of that Luna fiasco. And obviously with that, Celsius and a number of other markets, a number of other centralized platforms were taken down or taken out. We've just seen the biggest of all of this year's events that is a centralized platform, which is FTX. And we're struggling to push lower. Bitcoin only just breaking lower from where its lows were in June. And many of the other markets that do make up our top 10, which is our major market capitalization, they still haven't taken out those lows. So it seems as though the sellers, whilst not gone, we've got people that are holding for the time being. They're not being affected as much as what they were being affected by. That makes me conclude that we are getting closer to some form of a bottom. Doesn't give that much hope, but these are the realities. It's not about hope. It's about reading the charts. What are you guys seeing out there at the moment? And just sort of going through that top 10, Lou and Rhys, I just find it fairly mind-boggling that we haven't taken out or set new 2022 lows on so much of our market cap this year.
Mm. Yeah. Do you want to go first, Rhys?
No, you can go first this time, Lou.
Oh, sure. I'm the same. Like, it wasn't until 2019. So what's that? 2 years ago, almost 3 years ago now, that if we saw Bitcoin at 16,000, we just would have been like amazing. We didn't know if Bitcoin was going to go over, we thought it was going to surpass its previous high. And now we're hammering out a bottom effectively through a massive deleveraging event that's just flushing whatever's left out of the market, which is so healthy to see. And we're at 16, we're trading $16,000 on spot. So, there's not anything else like coming from someone like all three of us have money on FTX and all that. Like it was a very terrible event for many people. But these huge deleveraging events is so healthy for the market just to flush whatever's left out. And then this is how you find a bottom in a market so the new sprouts can grow and we can move on to the next phase. So it's really positive in that way.
Yeah, I think my views are a little bit different, not so much tech analysis based, but just around the news that has come out about FTX collapsing. That's basically the worst news we can get in the crypto space, and Bitcoin has held up reasonably well. The entire crypto space has held up quite well. So you've got to ask yourself, well, like, what are the signs that the bottom is in or the bottom is close, where horrific news comes out about the space and it doesn't affect price too much. Again, I'm not saying that the bottom is in. We don't try and pick bottoms. We just read the charts. But I was very, very surprised at how well the crypto prices held up during that crash. Just going through that top 10 though, my eyes are on Matic and Polygon.
Yeah.
That project just seems to be taking off. It's not reflected in the token price at the moment, but if you do any research on, especially in the Web3 space, Polygon is the pick for platforms to use. One thing I am excited about is the play to earn side of Web3. You can play your favorite games and earn tokens for it. Sony has just signed a deal to do that. So I'll really want to look into that a lot more.
Yeah, I'd have to agree with you there. I've never owned Matic, but it is definitely becoming one of the layer ones that I think has a real opportunity to survive very, very well. And we'll talk about some investment thesis in a moment around layer ones as well, something that's sort of served me quite nicely. I covered it in the podcast as well that I've been talking about, TRADERCOBB Crypto Podcast. I have a listen to that. There's a bit more detail in there. But just coming back, Lou, you mentioned before about the prices and what's going on, and let's bring this to reality, right? You said 3 years ago, 2009, we would have been stoked to have had 16,000.
2019, yeah.
2019. So you go to November 2019, we closed at 6,908. That was 3 years ago. Let's fast forward a year to the next November, 2020. So the next November was, where are we? October, November. So let's go off of that. That was then at 18, or call it 19,000. From 6, 8, or call it 7 to 19. 1 year. So let's keep this perspective. Now we go forward another November, and it is at closing 65,500. Okay. So let's look at the, where was it? November 19. We'll go from here to the high. This is just Bitcoin. You're looking at just shy of a 10x on Bitcoin itself. That wasn't even the low of the move. And this is why having these limit orders is a good idea, because you can just get your position. Now, whether you buy the bottom, you're probably not going to pick the absolute bottom, and you're not going to sell the absolute top. It's that chunk in the middle where you can create great wealth and have a great career. And that's what I've been forging, is just that chunk in the middle. So we look at that, and whilst we feel pain through here and pain of FTX and Celsius and all the other things that have happened, and our portfolio is falling, especially if you didn't take profit, we've got to understand that, if history is to repeat itself, and again, coming back to what you said about Matic with Sony and Disney and Nike and, the biggest companies in the world are getting into this space. Is it disappearing? No. There's more momentum now than what there was in the bull market of 2017. We're probably going to see something similar repeat, whether it takes longer, given the certain economic factors that have become a lot more dire with inflation so high and, that sort of stuff, remains to be seen. We might have to wait a bit longer. But the reality is that people want to be buying at these times. Well, if you want to be buying at those times, strap in, get ready, because we've got them. These are these times, these are these times. And as painful as it might feel, try and take away that emotional aspect and start to think about things from a point of 3 to 5 years ahead. Now, you can be trading throughout that period, making money as the market falls. That's what I've liked about these sorts of runs, is we can build our crypto, or we can build our stack in USD and then just hold it in USD. When the market's going, or when the time is right, you can put that into Bitcoin or whatever it is that you want. So just a quick one I think I want to cover as well, not so much chart related, but investment portfolio related. Did some research on some of the bull runs that we've had, and for the most part, the top 10 at the beginning of the bull run, if you had have invested in those top 10, and most of them are either exchanges, Bitcoin, or a layer one, you're averaging about a 12 to 13x from the low to the high of a bull run. Okay, so let's say you catch a 10 of that. Something like your layer ones has companies building on that layer one, other businesses that are coming in and building on that layer one. That is what Ethereum is. It's what DOT is. It's what Matic is, Cardano, so, Solana, pretty much our top 10 aside from Bitcoin and Binance. Obviously, Doge and Shiba, they're not there as well. But your layer ones have got revenue through there, like with Ethereum, for example, the gas fee, revenue, right? They've stuck the test of time. Your layer ones are something that you could be looking to get involved in at the right prices this time around. And you've got to, again, when we do this course, and when people come through our courses, and when, people like yourself, Rhys and Lou, you're talking to people about their trading plan, have an investment plan as well. Let's say you go, okay, well, I don't know, let's just pull some numbers out. 33% I'm in Bitcoin, 10% I'm in Ethereum. And then for the next, 45, what did I say? 35% in Bitcoin, 10% in Ethereum. You got 55% left. So take 5% off for your moonshots or your pre-sale type coins. So you've got a chunk for that 5% that you can, put $1,000 into a few different projects that you like the sound of. But the other 50% can be, strung across a number of layer ones potentially and other things. But it's about having the liquidity. So let's say I go and buy $10,000 worth of XYZ pre-sale. And then, I'm up 100x on that. Well, now I've got 10,000, 100x. Now I've got $1 million. I want that $1 million. Is there enough liquidity for me to hit the sell button there and realize that? Or am I going to be spending days? I've done this before. Days, tip, 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 small little sell orders into the market so you actually get a decent price. And that's what you see on a number of charts out there, especially the ones that are sort of illiquid. That's why we never say to trade, you always stay away from illiquid markets because you see these massive spikes because someone's going in a market buy, poof, they've taken up the entire order book. They've done themselves a disservice because they've bought the whole order book and then it's come straight back down. They're the sorts of things that can happen. And when you're looking at some decent sized layer ones, as we spoke of, Matic, Solana, what's in front of your screen here, they've got liquidity. So it's as much about, obviously we've got a trading plan, but have an investment plan there as well that you can stick to. What are you guys considering as far as, obviously this is not financial advice. This is three guys having a conversation with other people attending this. What are your thoughts around your investment strategies going into, well, where we are really, because we're at lows. I mean, I'm not saying it's the lows, but we've definitely come off a long way.
Do you want to go first, Lou?
Sure. Yeah, I'll go first. Look, for the last so in 2018, all I held was Bitcoin, and I was able to profit from that chunk. 2018 was when I was learning how to trade. So I made a lot of unrealized gains, wasn't able to profit. Last bull run, so last year, for the first half of that bull run, I guess if you put it into halves, I only held Bitcoin. I was able to profit nicely, get a good chunk there. And then off that monthly correction, I spread across a few different layer one tokens, like what Craig was saying, but they all had high liquidity. There are a few lower liquidity tokens, which I did get caught out on, which I don't want to make the same mistake again. So I'll definitely be looking at higher liquidity plays. Yeah. This time around, because it served me so well in the past, and I don't see any reason to change that.
Yep.
Nice. I think, I'm similar to you, Lou. I'll just be holding a big bag, a majority of bag of Bitcoin, and just focusing on layer one projects. What I do want to mention is that these tokens, when you buy these tokens, you're not buying a share in a company.
Yeah.
Remember that. You're not getting dividends. You don't own any of the company. You own a utility token. Does that token have utility? Does it have value? Yeah. Is it a shitcoin that has no value? Therefore, it's just the price is just whatever. It can be whatever. you've just got to keep that in mind when it comes to your investment strategy. Focus on tokens that actually have utility and actually have a use.
Yep, it seems simple now, doesn't it? And that's the thing, is a lot of people, look, the space is full of people that want to get rich quick, and the best way to get rich quick is to not focus on getting rich quick. You know, being an overnight success after 5 years of work is typically what happens, right? People come into this space and they go, oh, you know, I know somebody who put $100 into Shiba that's worth 100 million now. Great. Did you? And how did they do that? It was a moonshot, you know, play, and it paid off for them. Everyone wants to get 100x. Well, if you might pull a couple that are 100x in your moonshot stuff potentially, but you got to look at the whole portfolio. If you can get a 10x your portfolio wide, because don't forget, not everything's going to end up working out in your favor. Not everything will do that. You're going to have some positions that effectively go to zero. That's why you make sure that those high risk ones, you put a little bit in and you monitor that. But your higher bag holding, like Bitcoin, Ethereum, and perhaps if you choose to, layer ones and whatnot, if you can have a portfolio wide 10x and you bank it, then you're looking really good, because don't forget, you want to compound this. Let's say you take 100 grand and you turn it into $1 million based on that 10x. Well, you go and take your profits out. Let's say you've taken 700,000, you've got 300,000 in, just in case we do get a super cycle. Well, that 700,000 is going to buy you a shit ton more at these prices than what it would up there. So there's nothing wrong with taking profit, because it's profit. Like, how do you lose going into USD? Well, you might feel like you lose because there was further upside potential to be had. Well, that's called emotion. That's called greed. If you've got a good profit, take it, because what you want to be doing is, when you do get these big pullbacks like this, you want to be in a position whereby you're going, I had 2 Bitcoin last cycle. Now I'm going to have 20. And you ride it through again. And it's about turning that over, turning and churning, but not looking to try. Look, if you get 100x and you take 10 grand, you turn it into $1 million, great. But it's more powder for you to keep dry for the next cycle. Now, I'll tell you something through here. We had this big run up. I put more in. I took a big chunk of profits up here. And if you've been following me on YouTube back around those times, you'll have heard me saying it's probably not a bad time to consider logging in some profits. We pulled back. We got this signal here, which is a monthly cradle. Broke the high of that. I started buying again. I did take some profits through here, but I did not take enough, because this was the pullback. We were going to move higher. I play from my charts. It wasn't until this point here that it was like, okay, now we've got a lower high and a lower low. So I did cop. I took a lot of profits. I did carry a fair bit through this run here, but also with the ability to short, it doesn't make it feel so bad. As you can see now, monthly wise, lower high, lower low, breaking support, moving averages in the downward momentum. The market looks nothing but bearish right now. So yeah, I don't know, just a bit more food for thought and a bit more honesty. Yes, I've been trading and investing I've been investing since I was 16. So it's at 22 years, and I've been trading since I was, I think, 20. Yeah, 20. And you don't always get it right, and you can't expect to. You're not always going to get everything in your favor. The idea is to be right more than you're wrong, have plans in place, manage your risk accordingly. So, yeah. Was there any other questions that have come up there, Rhys? Rhys?
Oh, sorry, I was on mute. Yeah, I was saying there's not really any more questions that have come through, and we're tapping on 1 hour, so we should probably look at wrapping this up.
Yeah, that's what I was thinking. If there was any more questions, we could have covered those before we wrap. And look, this is a new sort of content, and I'd like to do more of these where I'm not sure if we'd say we do it weekly, but we'll just see how this evolves with what's going on. But it's quite interesting, and it's quite enjoyable just having a bit of a chat, as opposed to let's look at the market specifically all the time. I mean, we did that with our top 10, breaking it down, giving levels, giving perspective. But I think right now, a lot of what I wanted to cover, and the three of us, is there's still so much hope out there. Like, you'll be fine. What you've got to do, though, is you've got to work out where you're going to do it and how you're going to do it. Because it's one thing that someone goes and, like I said, gets a moonshot on Shiba, they put $100 in, it's worth 10 million now. But can they replicate that? Those that get rich quick tend to get poor even faster. Having a skill set, now, whether that be trading or becoming a great investor or that sort of thing, it doesn't really matter. But work out what you're going to do and put the yards in now, because I can tell you that the work that you put in today will pay off tomorrow. Not, it's a saying, not necessarily tomorrow right away, but it's about investing in yourself and having a bit of a plan. And if it is trading that you want to get involved in, we do have our Black Friday sale. Again, I have to mention it. Go to TRADERCOBB.com, click on the banner, 50% off of our trading community, where you get to see myself and Lou and Rhys do scans 5 days a week, 6 day a week content with watch list, educational material, and a community there of people to support you that are like-minded people. Now's the biggest discount that we have of the entire year. So if you are interested in that, TRADERCOBB.com, click that banner and make sure all the links are below, by the way. And make sure you join our Discord group if you haven't already. There's a free bit and there's also a members part there. So thank you for being here, gentlemen. I appreciate it. An hour is enough for us. I hope that we've been able to bring value to the viewers, listeners, whatever. And it's Friday afternoon, so have a great weekend, everybody.
Yeah, thanks, Big Keith and Satoshi Nakamoto and everyone else that's tuned in, Mona Davies as well, Robert Warner. Shout out to those guys.
Appreciate it.
Yeah. Good
Thank
stuff.
you, Craig.
Right, guys. We'll leave you to it, eh?
No worries.
Thanks, guys.
Thanks, guys.